Welcome to NABA Perspectives, where we look at key issues, trends, and stories that are driving economy, policy, and business across Africa. I'm Lanre Akinola, the head of content at the Norwegian African Business Association, or NABA, and this week we're speaking to Tellef Thorleifsson, the CEO of Norfund, about the changing realities of development finance and what a changing world order means for engagement with Africa. Tellef, thank you so much for joining NABA Perspectives. Real pleasure to have you on.
Hi, Landra. It's great to be here.
All right, to start with, for anyone who's watching this who might not be familiar with Norfund, it's of course Norway's development finance institution. Could you maybe just give us a little bit of a quick rundown of what Norfund strategy is for Africa, where Africa fits into, what Norfund does, what some of your focus areas are, and perhaps what's interesting?
Sure, no, happy to do that. I mean, first, Norfund is a development finance institution, as you said, but unlike many other development finance institutions, we don't take on debt on our balance sheets. We're not a bank, we're not a development bank, but we're merely an evergreen investment fund for developing countries. So we do more equity than most others, and we are free to take a somewhat higher risk. Africa obviously is important and has been key for us. And when I say Africa, it's mainly sub-Saharan Africa. We have around 60% of our assets in that part of the world. We've got 3 offices in Africa, and about 1/3 of our staff are based in the regional offices. We've got one in Kenya and Nairobi as a hub for Eastern Africa. We've got in Cape Town as a hub for Southern African countries, and in Accra, Ghana for Western Africa. And then we focus on certain countries. We're not everywhere because there are too many countries, with Africa's 54 countries, to be able in any way to have a presence in all those countries, but we focus on somewhat limited geography. Africa is important for us simply because Africa is core to the Norwegian development work, and also Africa being our neighbor and such a big continent with such a huge population and also such massive needs and also massive opportunities. That's certainly a place to be. And to your question in terms of sectors, we have 4 key sectors that we're working on under what we call the development mandate, and those are energy, and we're talking renewable energy. And within renewable energy, we work in 3 areas. We do large-scale megawatt type of projects, large solar parks, wind parks, and the likes. We do what we call commercial and industrial. It could be captive solutions to particular industries, towns, or it could also sometimes go via the grid, via the transmission lines, but still to dedicated customers. And then we do distributed, which is down to households. Could be small solar panel on a roof and a unit to connect the phone and to charge batteries and provide lighting. Second sector that we are engaged in is in what we call financial inclusion. Financial inclusion includes banks. We have equity stakes in a number of large banks in Africa. We are also providers of loans and capital to banks. And the reason why we work with these banks is because it's a key part of the infrastructure of any country. If you run a company, that being small or bigger, being able to borrow money, being able to transact safely, and also to transact with low friction and as low as possible transaction cost, that's important. And then we also, beyond the banks, we also do microfinance. And we also do some fintechs, and fintechs meaning that we invest in companies that could provide financial solutions down to individuals or to micro businesses and the likes. That's an area that's growing fast and interesting. So those for the first 2 sectors, so renewable energy and financial inclusion. The third being is what we call scalable enterprises. And scalable enterprises comprises us directly investing into certain type of companies, or us investing through funds. And what we do directly has been traditionally been quite a lot within agriculture. We still do some agri, but we quite prefer agri businesses that take a large part of the value chain. So not just primary ag, but also processing, storage, packaging, and the likes. And we also invest in targeted industries, such as we've, for instance, recently been investing in textiles in Africa, in Kenya, textile production. We've also done some manufacturing. So these are, when I say scalable enterprises, the enterprises that we believe can grow and sustain and be large providers of employment. The last sector, the fourth sector, is what we call green infrastructure. And green infrastructure is a new endeavor for us. We've only been working on it for a few years, but we aim to take a position within recycling of waste, water, plastics, and the likes. We've done a few important investments within the recycling in plastics, and we aim to do more. It's a challenging sector because very much of the value chain in many of our countries is not in place, but it's obviously a very important area that we need to engage in. So those four sectors are certainly what we're prioritizing. And then within renewable energy, we primarily investing from the development mandate, but Norfund, as of 2 years ago, also have a so-called climate mandate, a climate investment fund. And we also do some investments through that in Africa, and then mainly South Africa.
All right. Well, thanks. I mean, 4 key sectors for Africa. I think anyone who knows anything about the continent will understand that. I want to pick up on the renewable space and the green infrastructure space in particular. And you've kind of already referenced this, that there's a climate mandate. And, to kind of start to tackle this bigger picture of what we want to talk about today, which is, development finance in a changing global landscape. One of the key trends that we're seeing, one of the big trends that we've seen, certainly, and this has picked up quite a bit in the last year and a half or so, is a bit of a change of narrative around Africa when it comes to climate. So traditionally, the continent is kind of widely perceived, particularly in the West, as being, primarily a victim of climate change, a place that needs help rather than being a place that offers solutions. And we're seeing steps to really kind of counter that narrative. Last September in Kenya, we had the first Africa Climate Summit that was hosted by the Kenyan President, William Ruto. And he made the point that, look, Africa isn't just some charity case. We not only have the potential to drive climate action, but actually it makes good sense from an investment standpoint. What's your take on this? Are you seeing a shift in that, and to what extent does that inform the work that you do at Norfund?
No, it's an important point you're raising, and it goes broader than just climate. I mean, we've been used to looking at Africa from the Western perspective, from the North, always focusing on all the challenges. Obviously, they're massive challenges indeed, but that being, poverty, debt levels, droughts and floodings and what have you. But we also obviously need to think about Africa in terms of all the opportunities, in terms of the fact that some of the fastest growing countries in the world and growing along the lines of the fastest growing countries in Asia are in Africa. And parts of Africa is a continent, Africa is not a country. And parts of some of the countries in that continent are indeed fostering rapid developments, fast growth, and fostering companies that take on new technologies, do stuff in a very different way that is not in any way copied from the US or from other parts of the world. And coming to the renewable side, Africa, I mean, the great opportunities, that being within solar, within wind, the cost of energy, given the solar conditions or wind conditions, is competitive with any other part of the world. And in Northern Africa, there are a number of countries that are planning to start exporting electrons, i.e. electricity, to Europe. And so, yes, it's a fact that Africa as a continent accounts for, what is it, some 4% of the accumulated total CO2 emissions in the world, which is minuscule. So it's not Africa's fault that we have a big climate issue, and it's for real. But many African countries are suffering daily, and among those hardest affected by what we're seeing right now. But Africa also is seeing in many African countries that this presents an opportunity, investment opportunity, and it needs to be taken on. So turning that narrative is important, and I was impressed by Ruto and Kenya in being more offensive in that regard.
Yeah, And that's coming through more and more. And you've touched on this. There's a kind of conventional way of looking at Africa in what's often referred to as the global north. I mean, we can call it the West, as a place that is primarily defined by its problems. But one of the reasons that's changing, of course, is that Africa's international relations are changing quite rapidly. So one of the most important things that we've seen over the last couple of decades is the emergence of all of these new partners. 20 years ago, it was primarily the West that was engaged with Africa. Now it's across the board. We all know about China, and China is, of course, heavily invested in Africa, very influential. But it's not that simple a picture. It's actually a very diverse picture, and it's a picture that's becoming more diverse all the time. Countries like Turkey, regions like the UAE, the Gulf states are starting to make really big plays. Countries like Brazil, India, obviously, you name it. I mean, you can go across the board. How is that changing the realities of doing business? I mean, is that understood sufficiently in the West? Is that understood sufficiently in investor circles in this part of the world? Are you seeing more of an awareness that, look, we can't keep doing what we have been doing? Because one of the big differences with these new partners is they don't primarily see the risk. By and large, they're much more pragmatic and much more focused on the idea. Well, look, yes, okay, there are problems, but within problems, as you said earlier, there's opportunity.
No, it's a great point you're making, and I do indeed agree. And it's also been surprising me over the years to see how many entrepreneurs, sources of funds, companies who are expanding, that coming from the south, meaning it could be Middle East, it could be India, it could be Brazil, and also and leaving China aside. I mean, there's something like 1 million Chinese entrepreneurs in Africa, all over the place, building smaller companies or corner shops or what have you, but also from India and other parts of the world. I see that as great. Working south has a much higher chance of succeeding than going from our part of the world and applying our way of thinking and our quality standards. And not just, if I were to send expats from Norway to poorer parts of Africa, it's bloody expensive too, because the life standard that they are expecting costs a lot to maintain. And what implications for us? I mean, one example is that we've been supporting a company in Kenya called Hela, and Hela is a textile producer. That company does not come from Europe or the US. The customers are, to a large extent, in Europe or US, the big brands. But it comes from Sri Lanka, and they decided to move parts of the production from Sri Lanka to Eastern Africa, to Ethiopia and to Kenya. And they're doing that partly because there is a trading agreement with the US that makes it advantageous to be in Africa, but also because the access to labor is great, the productivity is great, and they see this as a long-term area where they want to expand. So it goes along so many dimensions. And also for us, we've been used to think of our co-investors coming from Europe or the US, that being multilaterals or the DFIs or Western investors. We also have now co-investors and partners from all over the world. And it's great for Africa.
Yeah, absolutely. You took the words out of my mouth, because the next point I was going to make is, and perhaps this is something that's easy to underestimate, is that this is also changing the game in terms of how African economies are positioned. Not only is there a growing capacity within these economies, but of course, what you have is a picture in which there's a lot more choice, a lot more leverage in terms of who you partner with, who you turn to for investment, and overall, you have a much more competitive landscape. I would say so. My take is massive opportunity for African economies. How do you adapt to that new reality? Because it's it can be a challenge. I suspect, judging from this conversation, Norfund seems to kind of get it, but a lot of people's thinking in this part of the world might still be behind the curve, like an underestimation of what's happening.
True, but I wish I could say that because of all this interest in Africa from all over the world, and also Africa now being strategically more interesting than it was some years back, for instance, in the mining sector, because of and resources and a pool of labor and others. Still, I wish I could say that, well, so it's increasingly tough for us to find areas to invest in. We're no longer needed. Ideally, we should make ourselves redundant, right? The private sector should be doing what we're doing. But post-COVID, post the Ukraine war, in terms of its effect on commodity prices, the stronger interest rates, the strong dollar, there is still a massive need for what we're doing. And some investors have been pulling out, particularly from Europe and the US, more so than the Middle East, for instance. So we are indeed needed, but we're not needed within all sectors. The one I would just mention, raw materials, mining, that's the elephant's waltz. I mean, that's done by the big guys in the world, and our money doesn't take us anywhere. We're talking big money. Within the energy area too, increasingly so, we're seeing more interest from others, but still, Africa last year only accounted for some 1% of the global renewable investments in the world. So investors like us are needed to help stepping up the game and to show the way to invest in project development, to engage early and to take risks. So we are needed. But we can selectively also see sectors that certainly explored and furnished and supplied very well by the private investors alone, and then we can stay away.
A very important point, because the role of DFIs I feel is sometimes overlooked. And you know, if you visit Norfund's website, as I did in preparing for this call, you know, the right and important point is made that, well, DFIs go where the private sector is either, you know, unwilling or not capable of going. So it's kind of basically provides quite essential risk capital, and in some ways, that is perhaps the need for that is perhaps even stronger, as you said, in the wake of COVID, in the wake of, you know, the conflicts, the war in Ukraine, and the other instability that we're seeing now in the Middle East, which has hit African economies quite hard. And we know that in terms of the fiscal positions of many African economies, the fiscal space has been reduced on the back of concerns about debt sustainability. So in a way, I guess, you know, the DFIs are perhaps more important to certainly to ride out some of these difficulties that we're seeing than you know, than we might like them to be.
Yeah, no, you're right, and particularly now, for instance, a number of countries are getting squeezed because they have their debt in foreign currency, in dollars, and the dollars has strengthened massively. So the debt pile has increased, not because they've taken on more debt, but simply for currency reasons. So you see in countries like Ghana, you also see others, they're struggling to get access to foreign currency. So there we are needed because we can be patient. But we also, in a constant balancing act as a DFI, in the sense that, yes, we can take risk. We're supposed to be investing where others are holding back. But at the same time, in my mandate, I'm supposed to be a minority investor. I'm also supposed to be mobilizing other private investors. And we like to make our companies, and we want them to become profitable so they can grow, because we believe that companies that are able to grow, people that can hire more people, given that you're in an area that is sustainable, that you at the end of the day will have a higher impact if you're not growing. So it's a balancing act, because we're supposed to do the impossible, but we're also supposed to bring with us other private investors and others. So we try and sort of balance it out. And sometimes that's quite tough. I used to be investing in the venture space, and I felt that tough because I was looking for new opportunities in areas that were sort of, you didn't know exactly how the markets would evolve. But at least we could agree on that you look for top line and bottom line and growth, and that's it. But in this domain, there's so many variables, which makes it interesting, but also fun.
Yeah, and on that point, you know, I don't want to sound sort of naive about this. Like, I'm well aware that there's still a lot of work to be done, and you know, there's many challenges across Africa. So I don't in any way overlook that. I'm a natural skeptic, and I know that there's a long way to go in terms of really transforming some of these economies. But overall, it's getting more interesting, I would say. I mean, would you agree with that? It's getting a little bit more exciting in terms of the possibilities of what you can do, both as a DFI, but just from an investment standpoint more broadly in Africa.
Yes, and I also try to, when I speak with the investor community, that I keep on preaching that please look beyond the OECD, look into the growth markets. If you take Norway as an example, we used to take risk in this part of the world. We've been used to be investing in sectors that are very cyclical. So why not take risk by venturing to new markets in Africa? Europe is this year will have a dismal growth, somewhere around 1% or whatever, depending on our latest IMF outlooks. The African continent will be growing at least 3 to 4 times as fast as Europe. And the European population is shrinking. The African is growing fast, and I'd argue in many countries too fast, but still it's growing. And so the opportunities are fantastic. And so many investors are also losing out on interesting opportunities. And one such area is investing within renewables, where the needs are massive, and renewables are highly competitive. It's the cheapest way of delivering energy, and it can be done in structures that make sense. As one example of an area that we need to be spending more time on.
Yeah, and the potential in Africa is just immense. I mean, anyone who knows anything about the continent will understand that. On the subject of Norway, I mean, this conversation comes at an opportune time, because Norway is in the process of developing a new Africa strategy. Now, it's still in the works, so we can't discuss the details of what that looks like. But I'm curious to get your thoughts on in the 21st century, if you are a Western government, a Western investor, you're sitting down and you're challenging yourself to say, okay, we need a new Africa strategy. What are some of the core tenets of what should go into that kind of strategy, and what are some of the things that you really ought to avoid?
Well, as you said, I haven't seen any drafts, anything, and so I'm sort of anxious to see how they are mapping out the strategy for Africa. And one has to bear in mind that Norway is a tiny player in a big continent with 1.45 billion people, and Norway being tiny. But still, I'm a little worried that we keep on being fixated in the narrative, that in the north-south type of narrative that dominated by the traditional thinking along the lines of development aid, refugees, poverty. Yes, unfortunately, there's all of that, but there's just so much more. And that it also focuses on the opportunities Africa has to offer, on the trade opportunities, on the export opportunities, and also the imports that we potentially can take on from Africa, competence-wise and in other ways. So I just hope it moves one step beyond just that traditional thinking, because we've been also the narrative and the way that the news is portraying Africa. You very rarely get any sort of pieces of good news from Africa. All the headlines tend to be some kind of a catastrophe in terms of flooding, droughts, what have you. And then when I traveled to Africa, for instance, I was in Lagos not long ago. If you read about Nigeria in Norwegian media, you think it's a place you wouldn't even dare to go to. And in Lagos, I'm meeting all these entrepreneurial people that are building tech companies that really want to drive forward, incredibly aggressive, ambitious in their attitudes, working bloody hard. Many of them having international experience, being living abroad, education from the best schools, and they just want to make it, and there's several sort of tech hotbeds in Africa, that being in Lagos is one, Nairobi, Cape Town, Cairo, so there's a lot going on, and I don't think that sort of is being understood in our part of the world.
Yeah, and it goes back to the point you made earlier. Africa is not a country, which is something we always have to remind ourselves of. And yes, there's plenty of problems to go around, and there are definitely countries that are having a very difficult time. But there are also many places where, as you've just outlined, there's a lot of things are happening that if you aren't willing to change that narrative and get out of that mindset, you're liable to miss. Now, you've touched on the tech sector, and there are places like Kenya, places like Nigeria, places like South Africa, is a lot happening. Beyond that, do you have a take on what some of the more interesting, exciting economies are? Any economies that you might want to keep an eye on as an investor on the continent?
I'd say, unfortunately, South Africa has not been doing well. It's the biggest economy in Africa. Well, now, depending on how you measure it, whether Nigeria is big or not, but still, it's a big economy, has been struggling. And that has been, if you look at Africa in aggregate, the growth numbers are really, really being, hampered by the stagnation in South Africa. But if you look at Eastern Africa as an example, we mentioned Kenya, Uganda, Tanzania, Ethiopia. Those countries are growing fast, Rwanda growing fast. And also in Western Africa, the number of countries in former Francophone Africa, and Nigeria. Nigeria is probably growing faster than we can read from the numbers because they don't have proper statistics. And also some people also believe that the population stats are somewhat exaggerated, but it's there are, and also one thing is the country growth, but you have some urban centers, you have some regions that they're fostering fantastic growth rates, and hopefully they can bring other parts of the countries with them when they attain a certain level. It's a bit like here in Europe. If you look at where you live, London, in the UK, London is like a separate nation in terms of having fantastic growth, and other parts of the UK are not growing that fast, and the same goes for many African countries. And it is a sector. It's hard to pinpoint one particular sector because it's once again it's a continent. But right now, certainly there's a big drive towards the mineral sector, that being copper or cobalt or what have you. The whole energy sector, we're investing both in renewables such as solar, wind. We're also investing in transmission as an example, but also believe in production, manufacturing, agribusinesses, import substitution as examples of industries that are interesting.
None of this is to say that it's easy, and I think it's important that we emphasize that this isn't some sort of like PR exercise. It's difficult, it's complicated, but the point, I guess, here is that things are changing. The global landscape is changing. Africa, for reasons that you've articulated, it's sort of at the cross section of a lot of that. Be it climate, be it energy, be it food security, and I think you're absolutely right in the mineral space, especially in the so-called critical minerals. That's an area in which there's a lot happening, and I think over the next 5 to 10 years, there's going to be some quite interesting things that are going to be going on there. We're coming up to time, so I think we can wrap it up. Any last thoughts? Any final thoughts on investing in a changing global landscape? Investing in Africa in a changing global landscape. Any key messages to challenge, perhaps, the prevailing narrative?
I think I'd like to twist it differently. It's more that if you are representing a business, if you look into investing, then start educating yourself, look into the opportunities, not necessarily travel to an African country or cities to start selling anything from day one, because they're complicated markets and it takes time, but start looking into opportunities, spend time and investigate and explore. Many businesses, if you start in Norway, you go to Sweden, or you go to Denmark, or you go to Germany, and why not go to a big country instead? So start sort of conceptualizing the opportunities and
you froze there for a second, but I think you just about made the point. I would add, if I may, and I think this is something that is it's important, perhaps sometimes underrated, but I think we need a lot less lecturing as well. I think that's something that really needs to change. Like the realities on the continent today are such that, yes, plenty of issues, plenty of problems, but I would say the days of lecturing are over. And you can only stand to benefit from going down there and having a little bit of humility and kind of seeking to partner rather than to go and wag the finger and say do this and do that.
I totally agree. Well put.
All right. Well, on that note, Tellef, thanks so much. It's been a real pleasure having you on. Great discussion, and all the best.
Thank you. Thanks, Sam. All the best.